Hey friends, Scott Smith with the Smith team at Keller Williams. Wanted to address something that we've heard over the last probably 6 months or even a year, where there's people that are just feeling stuck with a sub 4%, even sub 3% interest rate on their mortgage. They just feel like they can't move because they've got such a good interest rate. Historically, those are record low interest rates and they are fantastic. And a great financial strategy is to lock in that rate for 30 years, but that doesn't necessarily mean that you need to be locked into that home for you for the next 20 or 30 years. Actually, more than 50% of the people that have a mortgage, that interest rate is sub 4%. So you and half of the Americans out there that have a mortgage are under a 4% interest rate. But it doesn't necessarily mean that you need to feel stuck. If your family dynamics are changing, maybe you need more house, maybe you need less house, maybe you need to be a little bit better location, whether it be closer to work or closer to schools. Those are some options and reasons why people are moving regardless of their interest rate. So I want to share with you a real world story that we've just helped another client with making their move from their current home that we sold them about 5 years ago to a new construction home that we're in the process of helping them with. So the easy math, if you want to follow along, I rounded off the numbers just to make it easier to kind of get it in your head. They are selling a home for about $400,000 that they bought about 5 years ago. They're going to walk away with about $120,000 in equity that they're going to roll into their new $600,000 new construction home. And they are very excited about it. Yes, their payment is going to go up, but the benefits certainly outweigh the downsides in their family situation. Their monthly payment is going to bump up, probably be locking in around a 6% interest rate, going from like a 3.5% to a 6% interest rate. So their monthly payment's actually going to go up about $1,000. But we actually went in and crunched the numbers on it and said if they stayed in their current home for another 5 years, that home might be worth go from 400 up to maybe 440, 450, but they're also going to have some significant maintenance that they're going to have to deal with. And they looked at potentially remodeling their home, but in the end of the day, it made more sense for them to move up to something new. So their new house, they're buying it for about $600,000. In 5 years, that house is probably going to be worth, if we use the same math, probably going to be over 650, maybe 675 when all said and done. They've got an unfinished basement. They've got the 4 bedrooms that they really need for their growing family. And that extra $1,000 a month-ish is going to really make a huge impact on them from a financial standpoint and being in the place that they're going to want to be in long term. So if you're feeling stuck with your interest rate and maybe you're saying, you know what, in the next couple of years, we really should be moving, or maybe you've held off and waiting for prices to come down or interest rates to come down, now might be a time to have a conversation around possibly making a move and see if those numbers actually work for you and your family. Interest rate should be a 30-year sentence to be locked in on that mortgage. If you need to move, certainly take a closer look at the long-term benefits aside from the numbers, in addition to the numbers. Reach out to us, 651-777-3434. Give us a call, click, connect. If you found this video valuable, certainly hit the subscribe button. Make a comment if you have any specific questions for us. We'd be happy to answer them, either one-on-one or just a quick phone call. Happy to do that and help you out in making some decisions as you're moving forward. Thanks. Have a great weekend.